right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for November 7th, 2023. A good strategy session with the book advisors. They really like the idea of us hosting um, a book reading club, one chapter per lesson, almost like a director's cut, in order to do a real deep dive into what's contained in the book, which could then help produce a study guide, maybe a quiz, and certainly Q&A and discussions. That'll be helpful for the foundation's workshop as well. So we'll get started on that pretty soon. All right, we'll start with Alcoa and the 30-minute hybrid swing. So today there was a gap down to here, and then a 1, 2, 3 entry. It was looking for that. It rolled over fast and was able to just exit with a scratch. I missed the afternoon move, but no overnight risk on that one, so net scratch. AI continues to be one that pays off. This was yesterday's sell-off. This was today's SSC and PSAR flip entry, and then it exited here at the Bollinger Band mean for about an R. Amazon, emerging dragon entry for 2R, standard exit. Caterpillar, intraday collapsing dragon for an R. Cliff, no trade. Missed the morning. I just missed the morning move and the afternoon move. It's just bad form. I did get started on CVS on the PSAR flip, and then that just continued to grind all day, and we're holding 2R at the close, at the low of the day, and it's in the winter, and we just entered the winter recently. So this one has a chance, in my view, to get all the way back to 69. So I'm looking forward to managing that one tomorrow. Disney, no trade. Dish, there we go. So this was that really harsh move yesterday in Dish. It reversed this morning, so we closed it and took a 1, 2, 3 entry and was looking for a return through the dragon, maybe towards the Bollinger Band mean, but it really just petered out, and we got out of it basically with a scratch. Devon Energy, big gap down, so continuation short, and that's a collapsing dragon all the way back over to here. Collapsing dragon bottoms out here. I take the dragon skin exit for 3R, no overnight risk. Electronic Arts, no trade. I missed the morning move. Emerging markets, no trade. Ethereum, I took the lunchtime explosion. So I missed this sell-off. That's about a 1, 2, 3 entry, but it's also a COTA 2 standard risk, and that just closed very well for a little over 2R. Mexico, no trade. Brazil, tried the gap and go, an emerging dragon, but that basically just went sideways, and we escaped with a scratch. Intel, COTA 2, and it closed above the peak of the RL10, so I'm holding that one overnight. That's +2. International paper, gap down, collapsing dragon, standard risk, standard exit with the dragon skin for 1R, no overnight risk. Real estate, scratch. Coca-Cola, no trade. Regional banks, scratch on a collapsing dragon. Mattel, no trade, sideways quiet channel. McDonald's, we closed the multi-day emerging dragon for 5R in 4 days, so I like that one. Merck, no trade. Microsoft took the emerging dragon and cashed it for 1R in the usual way, just above the PSAR. No overnight risk. Tactical trade. Marijuana, no trade. No trade in NVIDIA. Clean energy, no trade. It was a pretty quiet day, actually. Rivian initiated the COTA 2 after that long sliding PSAR flip and a quietude during the day. I just kind of snuck into that one as an owl, and it paid off. And I like where that's heading. The fact that it didn't fail in those 2 days, that both tests were reversed quickly. I like this having a chance to get back to the 10-day high. So we'll hold that one overnight. The S&P, basically one of the quietest days of the last month. Treasuries grinding. Tesla initiated an intraday COTA 2 as it was crossing the Bollinger Band mean, and it closed very well, so I'm holding that one overnight. And then U.S. Steel, gap down, collapsing dragon skin exit for half an hour in the usual way. I missed that move, and I missed the sell-off. So a fairly quiet day today, and more exposure to the long side overnight. Sniper trade of the day. We'll get to that here in a second. Let's start with where was the initial one? Here. Right. So let's just kind of analyze this one a little bit. So here's the opening, or I'm sorry, the close at 4 o'clock. This was the overbought condition from yesterday, so that carries over. So in the WMB3, the W is already established, and then it never gets, as we go up to the MACD histogram, we're looking for an uptick. So you got to start reading this to the right, and we get an uptick here. From this bar to that bar, there's an uptick. So when that closes, we can then read this up. And then this was the bar that when it closed caused the uptick. And it has a high right here. So the WMB3 entry then puts a entry just above there. This one did not take that out, so we don't get the entry. But this one does. We get the entry here. I dropped the manageable risk box. The signal that gets you out of this, in this case, would be a crossing of the Bollinger Band mean, which is also the lower skin of the dragon. So this is actually wider than an R10, but it is a reasonable risk box, and it's based on where the signal is. Like if this went below the Bollinger Band mean, I have a signal that the upside move is not happening. So that's why that becomes the execution risk. Now, if I go back a few bars, this is one where we could have in this yellow spot right here on that bar, we could get an entry here, which would be an emerging dragon entry because it clears the R10 over here. And so you have a sell-off, and then this is an emerging dragon. If we had taken this one, this is really a 1, 2, 3 entry, 1, 2, 3, and it takes out this bar's high. It's also an RLXD, where the RL10, you can see, crosses the dragon. So in this morning trade, as you're stalking this, starting with, the opening here, you start seeing this, and you say, well, I could take the RLXD, I could take the Emerging Dragon, but I was staying with the WMB3 entry, which waits for a breakout above the peak of that one, and that's what you get here. You get a breakout, standard risk. I'm using the Wu-Wei exit, so that means that I'm leaving this in place until I get 3 PSAR dots above my entry. So when we fast forward, uh, 10. How many bars past the setup bar is the trade still in play? Until it breaks out, because you could theoretically get an oversold and then an uptick, and then it never fires for you. What'll end up happening is that this downward pressure, you never got a breakout above the previous bar's high, so you just keep marching that thing down. Eventually, this will become oversold again, and then you just reset. Then you have to have some price improvement, which is enough to make the MACD histogram uptick, and then you might be entering on this bar as it breaks above that bar. So you just keep marching that thing to the right until you finally get a entry, and every time it goes down further, you're just getting a better entry, and so you're stalking it in that way. That's in the advanced day trading course also. What I'm looking at here now is the Wu-Wei exit. And right now, using that strategy, get the pencil going here. In the Wu-Wei strategy, you leave that in place until you get 1, 2, 3 PSAR dots above your entry. And what that says is you're willing just to let that be the noise box, and that should hold. If this thing is really going to work, it should never come down and test this, so you can just give it room to breathe, let it find its way, and then as it begins to work, then that's going to be pulling the PSAR north, and then when the PSAR crosses your entry, 1, 2, 3, I now have some evidence that this is a winning trade, and then I can jump my stop if it was right about here. When that third dot closes, I would be jumping it up to the fourth dot, and then that's where I lock it in. Now, if you had used the Emerging Dragon or the pocket entry, and you're entering here instead of here, now you could look at this and say, well, this is my 1R move, so I'd be holding about 2R right up in here. Whereas on this entry, with that execution risk, I'm only holding about 0.8R. So if I had entered here and I'm holding 2R there, then it's reasonable for me to jump my stop up to lock in this gain. And then this would have probably gotten me out for about 1.5R. So it depends on what your trading plan is. You have some real choices on how you want to enter intraday. Just trying to make you aware of these. So that's how we get started. And then I would just tell you, I would not be offended if you started off saying, I'm going to do the Wu-Wei exit and probably get over here. And then you see this move and it held here. And now you get a 1, 2, 3. And this is starting to roll over twice. I'm not offended if you decide to override that and move it to the bottom of the dragon and lock in and just change your plan and lock that in. Why is that okay? Because you're making a change to your plan in order to lock in more gains. That's not costing you money. That's earning you money by locking in sooner. So you're allowed to upgrade your discretionary exit, even though you started off with the Uwe exit. If I'm coaching you, I'd just say, look, when you see that second leg up and now it's starting to stall a little bit, there's nothing wrong with moving your stop there and locking that in. Why not? Because otherwise you're at risk of this thing coming all the way down and losing -1 instead of making 0.5. You're allowed to decide that. All right, the next leg up in this little exercise. So again, just isolating on the entry we took, entered. Now, when this gave us a 1, 2, 3 recovery here, that was enough to make the R10 reverse higher. And in this bar, I'm looking at this decision. I'm considering a second entry already. Even though I'm not at a 2R battle drill, I'm considering a second entry because it gained traction. It could have failed here, but it didn't. And the river is rising, and I've got higher lows, and I've got higher highs. That feels like a vote of confidence. So I considered it, but I decided not to do it because I didn't have 2R in hand. And so now I see, okay, here's the 1, 2, 3 PSAR dots above the entry. So on the fourth dot, I take that exit, which was here, and I jump it up to here, and then I decide I'm just going to track the PSAR. And now right here, my exit is there. And this thing has rolled over. That's now the second time it has rolled over. So I could consider taking the exit here. I could take the exit here, or I could leave the exit there. So I might have exited here, or wait for it right there. So I'm considering the sniper exit. And the reason I just let it run and I just lock that in is because I'm only holding 1R, because that's the wider than usual stop, and we got in a little bit later than usual. Right? So I just decided to leave that in place and let it run. Here's what that trade ends up looking like in the full series for the rest of the day. Well, actually into the lunch, through lunch. So those were the two earlier entries we didn't take. That's the WMB3 entry with that standard risk using the bottom of the dragon and the Bollinger Band mean. Here's where that third PSAR dot hit, so I jump this up to here, and I just am going to trail it and then take the exit here. This is where I was considering that second entry. I didn't take it. So we get out here on the R10 rolling over the second time, and then it doesn't fail back to the VWAP. It doesn't fail at all. It resumes, and now I get a emerging dragon entry. This thing runs all the way up, and that looks like what we call the horns of the dragon. And then as that reverses, I just take the no lose plus dinner for 2 exit and lock in that little piece. Now I'm in the zero state, and now this thing rolls over, gives me a PSAR flip, breaks through the skin of the dragon, so I take the Kata 2, or the supported fall crossing, I should say. It confirms that it's short when it crosses the Bollinger Band mean. It crosses the VWAP at just a little blip. This could have been a second entry. This could have been a second entry. I just keep the 1 on and then take the routine exit when the R10 runs into the PSAR. So that one earns 1, 2, 3. Now notice this execution risk is smaller than that one. Why is that the case? because the R10 is small on this thing, and this is the size of the risk that is the signal. That is a signal that the short side trade is not working. If this is going this way, it takes out the PSAR, and that's where the PSAR would flip, and that would be a signal that the long side is working. So that's the longest. I don't need to stick around any longer than that. So that makes this a risk box. I then compare that to the size of my MMRB, my little R10. This is still a little bit wider than the R10, so that's a manageable risk. So I get short, I put that execution risk on, and then just manage the trade on one position, and then it times me out there. Then I get an SSC entry. In this case, the signal to get out would have been like a violation of the R10 and the P server, and that's so close that I opt for the wider R10 exit as my execution risk. And then that thing gives me a little blip up to the VWAP and rolls over. So I take half an R on that little gain, and then that's done. So that's the sniper trade of the day on that rascal. Just want to show the different choices you have for entry, and you got to find the one that works for you. This is another intraday trade. This demonstrates the owl entry. This was on Dish. This is your harsh winter, criteria 1. Here's your RLXD, the bottoms out, crosses the R10 crosses the 30. Here's the, at 3, the R10 crosses the dragon, that's your RLXD. It also hits that PSAR. At 4, the dragon has rolled up. At 5, the RL30 has rolled up. So this is an owl entry. And then the execution risk is the PSAR flip. So that is the size of my standard risk box. In this case, on Dish Network, it is 0.08. I mean, it's a $3.34 stock. And so 8 cents is about 2.5%. It feels incredibly small, but that's 2.5% of price. And so that's our risk. It moves out, it crosses the Bollinger Band mean. I might decide to just do that and get my risk out. At the 2R battle drill, I've got to have my stop up around in here, 1 bar low even. This is where the 1, 2, 3 PSAR dots. So by this time, I should have my stop up here and trailing it with the PSAR. This is a 2R battle drill second position. And it just blows right through that. Has this peak, it comes back, and now it starts chopping sideways. And when the R10 rolls over, crosses the RL30, there's my P1. That's the RLCO, regression line crossover. The 10 crossing back over the 30. I then take the edge of the dragon exit right here. After the signal, I take that exit. And then this thing rolls over a second time. And I wouldn't be offended if you took half here and half there. This is where you actually get the R10 rolling over and the dragon rolling over. So I prefer this exit, and you didn't lose anything by exiting early. Let's see. So yeah, that's the owl entry. You also get a if you're looking at the WMB, you know, you have some oversold here, and you get the uptick here. So you come up to this bar and you put a entry above that, it doesn't hit. So then you go to this one, it doesn't hit. You go to this one. So that right there is it's a 1, 2, 3 entry. It's also a WMB3 entry. And you would get that entry rather than this one. And your stop is still down here because the signal that gets you out is a violation of the belly of the RL10. So in this case, your wrist box would be like that. Your execution signal is here. Okay? So a slight improvement. There's nothing wrong in my view, just waiting for the PSAR to flip though. But this allows you to start stalking and being ready for the long side trade. Then when the PSAR flips, you've got a clear indication that the other side of the trade's in play. And then that's reinforced by when the Bollinger Band mean reverses higher. All right, let's look at the traders. Here's Brian. He tries the short, the collapsing dragon. He stops in reverse. That fails quickly, so he takes a quick cut, and then this one pays off, and the 1.5 pays for the minus 0.95. He stops in reverse here. That gets him paid, so he nets 1.36. He's still rolling along with a 0.36 expectancy on 61 trades. Pretty good work. This is Hamad. Good short, stops in reverse, gets paid. Good short, and I think his exit was in here. That's a little bit late on the exit, but he does get 0.6 net for the day. Good work. In Rivian, got a little chopped around in here. Resets in time to get paid. Stays out of the chop in here, and then gets paid twice. Still makes some micro gains. Micro gain. Oh no, this was a net flat for the day. EWW is best for him, and this has the best reliable intraday moves of the things that he's trading. So stay with the EWW. Nothing wrong with that. Mark has another pretty good day here. Netting 5 in the pound dollar on 3 minutes. Worth studying. He's nailing these. Like, he's getting a big fat part of all of those big moves. And on where it's not working, he's not staying wrong too long, but he's getting paid pretty well in here. Now, this is one where we got to do better. Where's my little device? Yeah, so on this collapsing dragon right here, you got a high, a low, a lower high. That's a collapsing dragon all day. And that allows you to get one position. That could be your second position. And then if you had gone a third position, you can't wait to give back that much on 3. So that's why I kind of like, I like 2. I like this one. I love the re-entry. I love the second entry. This was just really nicely done. It really feels like you're hitting your stride. Now, here's, you asked me some questions about when you shift to the 30-minute trade, you notice that on these 3-minute trades, you're staying in the trade a long time with the R10 and the R6. But when you shift to the 30, that size stop is getting you chopped out. Yeah, because you're inside the noise of the bar. What you got to remember is that these stops here are based on the indicator framework that tells you where your stop needs to be. So, for instance, let me find my little. So this is a PSAR flip and an SSC. The size of this box is not driven by the arbitrary statistics of the size of like an R10. The signal is the fact that if this starts going down, a violation of the bottom of the R10 and the PSAR flip, that's a signal that the short side trade is starting. So once you figure out what the size of the execution box is, you then compare that to like the R10 or the R6 to determine if it's manageable from a statistical basis, which means if you're using the R10 and the R6, you know that you have enough upside of gains to justify taking that risk. Now, when you look at the size of this, that's a tenth of or a hundredth of a penny or something. The size of that box is really small compared to the signals on a 30-minute. So to have the same logic, you've got to draw the size of your execution risk based on the trade framework on the time frame that you're at. So on this one, if I see this upward move down and it holds inside the dragon and the PSAR is up, now suddenly I can get an entry here as a kata 2. So this is a kata 2 entry. The adverse move that tells me that the upside trade isn't working would be a violation of the PSAR. So I've got to draw, if that's my entry, my execution risk box is this big. And this whole move up, that never even came close to the PSAR. So on the 30-minute bar, you got to accept a wider stop, but then you got to use the appropriate trailing indicator in this case. See, like all of these this little pullback was triggering an R10. You should never get out there. You know, this bar looked like this. It opened here, it went up and came back here. It's still well above the high of this bar. That's not a signal to get out. The skin of the dragon is here, the spine and the lower. Your stop should be here. So you could actually get this entry and have one trade that gets that whole thing. And when the R10 rolls over, now the skin of the dragon becomes the exit. But as long as that R10 has a positive slope, you can afford to trail it with the wider stop. When the R10 rolls over, then that leg up is done. It's now becoming this. So now I can tighten my stop up here to the skin of the dragon, and then I get this trade. I get an entry here with that much of a risk, and I get this gain all the way up to here. So that's about 1, 2, 3, 4. That makes this a 4R trade instead of all this little choppy stuff, which got you 1.5. So that too tight of a stop cost you 2.5 because you could have had 4, but you only got 1.5. So the opportunity cost was 2.5. Okay. And then if you add a 2R battle drill, you get even better, as you notice here. So that actually answers the question you sent me to discuss on Thursday. So listen to this and think about it, and let me know if you need to hear that again on Thursday for foundations. But that's uh, you're going to see the same thing in here. This here's your PSAR. Here's your PSAR flip. So there's your risk box. Here's your entry, and you just stay as long as that RL10 is rolling up. You're good until here, when your stop is here, and then when that rolls over, you jump this up to the skin of the dragon, and then you get out there. The other, yeah. So your entry should be here instead of here, and then your exit should be there, and that gives you about 1, 2, 3R instead of minus 0.41. So that one cost you 3.4 in opportunity. The upward momentum is strong because the R10 never flinched. So until it rolls over, stay in and use the wider stop. If that feels too far away for you, adjust your feelings and trade with smaller risk, or you could decide, let me trade up and then use the lower skin of the dragon. No, let me trade up and use the lower skin or the spine of the dragon. Once you raise that up, never reverse and say, let me go back down to the skin of the dragon. So you can always trade up to the trailing stop indicator, but never widen the stop. All right, I think that's the rest of your trades were similar in that sense. George, crushing it in the collapsing dragon. On this one, you got the second position in at 3, right around 3R. When this rolls over, especially with 2 positions on, you got to take that exit at the edge of the dragon instead of waiting for this. Then you can take that as an entry, because once you get out of this, you get into the 0 state, and there's your SSC entry, and there's your second entry after it crosses the Bollinger Band mean and crosses the VWAP, and you should be smashing that. Why? That thing is in play. If this is an overreaction based on fear, then that's going to be a great big move. If this was not an overreaction, then you expect it to fail right away, and then you re-enter with a collapsing dragon. But as long as it's moving up, then this was an overreaction, and the further it goes up, the better you like it. And the indicators to the upside that this was working are the skin of the dragon, the upper skin of the dragon, the PSAR flip, the VWAP, the Bollinger Band mean, and then the Kata 2. Even if you just get that trade and you use a risk box below the VWAP, you're still going to get 2R on that one. So we left a lot on the table. Same thing on this one. Still, this is late entry. We should be, the collapsing dragon entry is right here. That's also the OR3 entry, so we're a little bit late on that. And then when this reverses, take the exit at the skin of the dragon. Don't give back that much. And then that is your entry on this trade, which won't lose money. All right, daily report. bullish normal, strong short term. This little move past the up to a new 10-day high and a overbought, reinforced by favorable volatility, which is telling us risk on, and that the move is bullish. And we see the things that are working: finance, conservative conservative large caps in the Dow. In the Dow, there's a handful of things that test out well on the auto framer, including some energy stocks. Lots of dojis today. Same in the ETFs. A handful of dojis, some reasonable auto framers. What I want to show, we're dominated by spring and summer, so the long side is in favor. We want to just notice who the winners are and who the losers are using the NDX to help us make that call. Come on, damn it. Intel, Microsoft, Apple. That's old school tech. So that's also components in XLK, which is also crushing it. So it's tech leadership plus Brazil. That's your focus for tomorrow. Don't be surprised if they move well. I want to show you something in here. The z-scores of the three regression line slopes. So this is looking at, these are z-scores, the relative steepness of the slope, right? And the red one is the RL90. That's the health of the next higher trend. And this little rollover here just about got flat. So this is a turning point in the weakness that this regression line is describing, and it got to +2 z-score. So the upward move was a 2 sigma move up in the RL90. This was really an exceptionally strong move that terminated right where the RL90 rolled over at +2z. And then it has had a deliberate move down, and it's now at -1.5. So it's outside of this normal band between plus and -1. So this is the normal band of plus and -1. For all three of those, so we're comparing z-scores of the RL90, the RL30, and the RL10. Now, while the RL90 has been a slow and steady decay, that's telling you what the primary trend is. And this was the turning point. And this is lined up in time. So this strong move up corresponds with this move from 390 to 460. 390 to 460 plus $70. That's what that slope of the RL90 says was an amazing move. So you got to protect that. When that rolls over, it starts to decay steadily till it comes all the way across this yellow zone and now comes down to abnormally steep downward. And that was a move that terminated down here at 410. It went from 460 to 410, which is -$50, which is -11%. So that's a correction. But instead of failing further down to 390, which is one of the things we mapped out, that possibility, that could have been the next leg down. Instead, it held in the middle of this support level, and instead it bounced up here. That move was so strong that look what happened to the slope of the RL10, the z-score. It was at minus 2.5, and the slope of the RL10 zoomed all the way up to now it's almost at Z3. That's a 5 standard deviation shift in the downward slope to that upward slope. That is a violent roller coaster. Now, the intermediate one, this is the RL30. This is like that COTA 2 to the downside, and it held. And now it has crossed the 30, crossed the 90. It still has some room to go before it's overheated. So this could actually, now that it's on the far side of the river, still get back to here. That's possible while the RL30. The only concern I have is that the 10-day move was so extreme that this might be ready for a pause. Now, we've actually seen 2 days of sideways lack of follow through, so it's setting like a little flag. That might be enough to let it go, and then you would see this resume up, and the RL30 keep going up, and then the RL90 could lead to another long sloping trend. So just notice the difference now in the magnitude and the vol. These are little short, choppy steps up but now look at how big the moves are. The volatility of the upside is small and tentative. On the way down, it is large and violent, which is why we love the collapsing dragon, especially at turning points. And then especially when this fails, we get that. When this fails, we get that. So that's how you read and interpret the z-scores of 3 regression line slopes. And then here's the explanation of it and how to use it. This is an excerpt from our next book. But you get to see it every day. All right, that's everything we got for today. We'll get this published and posted and catch you tomorrow. Take good care. There was a very good Creativity 202 check-in today. You really should consider taking that course. It is so good. It's the best coaching that I do, I think. Everybody that takes it has had transformational experiences. Your mileage may vary, but it has a pretty good track record. And now that the book is out there, I am hoping that we start filling that thing up, so there could be some scarcity with that. I can only coach so many people in that course. So just word to the wise. All right, you've been told. Take good care.